Hello and welcome. You're watching Closing Trades on ET Now. I'm Anisha Jain. As we start the show, let's start with some good news. And the news has been that ET Now has been consistently been #1 for 12 straight weeks. Yes, it's all thanks to the love and support that you guys have been showering on us that we have managed to continue with this leadership position for last 12 weeks. Thanks to the entire team here who has been getting us those breaking news, the best analysis, the fastest insights and the accurate details that we have managed to help our viewers to stay ahead of the curve, and that's something that we would love for you to continue doing, as well as keep showering your love on us and attention as well. And here's hoping that we can continue to do good work and make sure that we are deserving of the kind of attention and love that you have thrown upon us. But for now, a big thank you from the entire ET Now family. But it's not a great thank you coming in for the markets at the moment. It's Nifty, which is actually taken a bit of a tumble, down around 0.3%, almost 200 point slide coming in. We started off well in the green. In fact, initially, if you looked at the trends yesterday, it was suggesting that GIFT Nifty is likely to open in the green. But from there, the entire sentiment has soured of sorts, and we are seeing a bit of a cut on the screen. It's been led by financials largely. So if you pull up Nifty Bank, you'll see that there is a bit more pressure there. It's down about 0.5% as we speak, though the broader markets are faring much better. We should pull up the mid cap and the small cap indices, which are sitting with much lower cuts, and then the advanced decline ratio will come up for you on the screen. It's also not looking as bad as it was earlier. So we have managed to see yes, reds being at the higher end of almost 1900 to almost 5600 in the green, but nonetheless there has been a bit of an improvement. But let's talk about individual sectors and stocks and see what is buzzing in the trading session. Top of the heap is of course Adani Enterprises and the kind of cuts that we have seen coming in across the board, whether it's energy, enterprises, power ports, etc. Remember that US Department of Justice indictment is weighing heavy on that particular stock. The company has come ahead on record and said that all those allegations are baseless. They have been fully compliant with law, and they will make sure that they continue to support the jurisdiction and come out unscathed as far as this is concerned. But we're watching out for this developing story at the moment. The other one to watch out for is Nykaa, and not just Nykaa. Let's pull up Honasa Consumer as well, because for 3 days on the chart, Honasa has been on the back foot. The first day it saw a slide of around 20%. The next day as well, there was a big slide that came on that counter, and today as well it's sitting with a cut of around 7%. We'll try and pull up that stock if we can, because that's the stock that I wanted to talk about before we move forward to Nykaa, because there seems to be an industry-wide issue today. The overall circuit has been revised on Honasa from 20% to 10%, but it has managed to hit lower circuit yet again. And pull up the 5-day chart or the 3-week chart, 3-day chart, because that will tell you the kind of wealth erosion that has happened on this stock ahead of the earnings. This stock was closer to $400 a piece. Since that earnings disappointment has come through, there's a 40% decline on the stock, and now it's below the level of 250, of course below the IPO price. Nykaa too is under pressure. It's a Bank of America note which has come in. They have downgraded the company to an underperform versus a neutral earlier. The target price has also been slashed quite materially. They're looking at a number of 150 as the fair value on the stock. And they're talking about the slower margin improvement which is expected from here on. There is that urban quick commerce bit which is expected to impact the revenue as well. We did speak with the management just a few weeks ago, and they were talking about how they're coming up with their own pilot versions of quick commerce. They're not likely to tie up with the likes of Blinkits and Zeptos of the world, but what they're trying to do is perhaps a one-day delivery or a few-hour delivery, because the number of SKUs they cater to is much large. We'll try and pull up that bite as well for you to play out. But UPL is the other one, wherein that they are selling around 9% stake in Advanta to Alpha Wave for $250 million, and then they're doing a rights issue as well. So in an otherwise weak market, that stock is holding up in the green. But time now to get some analysis going on the technical front, and Kunal Bothra as always is with us in the studio. Naresh Marani will also join us shortly. But Kunal, just first coming to you, this sideways move, this boring market which is taking a lot out of us in terms of the patience, is that something which you expect to continue? Because it's the day of expiry, you would expect a lot more volatility or a bit of a movement. Today it's been pretty much flat.
First of all, congratulations, of course, to ET Now, and of course being the top channel over the last many weeks. My sense on the markets is that this round of volatility which has come today is of course on the back of the news flow which started off, or the market started off in the morning, and I think that's one of the major reasons why you saw that sudden sharp volatility. But then the market has two different textures. So for example, for the first 1 hour, 2 hours, for the market open today, we saw the Nifty and the Bank Nifty taking a sharp knock. We were at a point where the Nifty was sub the 23,300 levels, and the Bank Nifty was also below the 50,000 mark. But then the intraday recovery is also quite notable for the indices. We managed to hit back a previous swing low for the Bank Nifty, just a shade below that 50,000 mark. What matters over here now is that if the index gets into a consolidation, even though the volatility continues, but if we don't make significant lows, that I believe could be a sign that the market breadth could start to improve. So as of now, we can just expect that the index could remain into a bit of a range, even though the range could be a lot more broadened than what we've seen historically.
Okay, so let's see how it really heads in the next 1 hour or so, because the Nifty expiry, of course, is something that we're watching out for in terms of the weekly expiry. Let me correct myself there. But Adani group of stocks, they're of course coming under a lot of pressure. What exactly has been the news flow and what does the company has to say on the same? Varun is joining us with all of that.
Well, so Gautam Adani and 7 others, they have been found guilty in US in a multi-billion-dollar bribery and fraud schemes. Gautam Adani, Sagar Adani and Mr. Jain, they were charged with securities fraud and conspiracy, and 4 others, they were charged with conspiring to obstruct justice. Now, what were the allegations? The allegations were there that more than $250 million have been bribed to Indian officials to secure solar energy contracts between 2020 to 2024. And these contracts were expected to earn profits of around $2 billion in coming next 20 years. The bribe was given to obtain funds from US investors and also from financial institutions on the basis of false and misleading statements. These charges fall under the Foreign Corrupt Practice Act in US law against bribery in foreign business dealings. On this, Adani Group has to say that the allegations are baseless and they are fully compliant with the laws, and they are taking all possible legal recourse to tackle this. But they have also postponed, or they have decided not to proceed with the proposed $600 million bond offering that they were going to come up. Also on this, Solar Energy Corp India head says that there is no basis to investigate the matter. They have not received any documents over charges from US, and they are not clear if any covenants have been violated. But yes, because of this news, you can see that the Adani stocks or Adani Group stocks are beaten down since morning.
All right, we are just going to stay with the story, just mark some of these stocks here. I'm not getting into the judgment of what is right, what is wrong. Stocks are down, and more than anything else, it is having an impact on the markets per se. It appeared on Tuesday that all is well. With 3 days ka dialogue tha na, all is well, right? It appeared on Tuesday, right? All is well.
Yeah, look like.
But all is not well now.
Yeah, it looked like things are recovering. At least the markets would probably try to get back into its consolidative mode. But I think today's impact in the start has again dented the hopes for short-term traders. And it brings back the case of volatility coming back. So we were, after 6 weeks of consistent price correction, there was some hope that maybe the volatility could start to subside. But after today's move, it looks like that maybe that's not yet the case.
But before we get more guests on the board, Kunal, help us understand this correction that we're seeing in the market today. Is it because of this news flow impacting the sentiment, or are there other technical factors and other, volume related factors which are also causing it?
So today, in fact, the market breadth is slight better than what we saw in the last few days. There was hope and so the first point and most important point is yesterday till the fag end, the GIFT Nifty was up almost 150 to 100 plus points. So maybe there was expectation that the markets would probably open up with a gap up opening, and we may trade closer to that 23,500, 700 kind of a zone for the index. But I think after today's move and the index failing to cross over that 23,500, 700 mark as a resistance, I think that's caused a concern for the short-term traders. So it's about waiting and how long a short-term trader has to wait out for the index to get back into that process of a bounce and show some sort of resilience and strength.
Okay, HP Ranina joins us now, lawyer with Supreme Court. Mr. Ranina, we are talking about a case in a foreign land, United States, which has a very different kind of a court structure. Can you first identify the meaning of this? can you then identify and tell us that in this case, if the Adani Group has to move to a higher court, what could be the process? How long could it take? And when will the final verdict come out? If this court moves, which it has to move now as per the United States laws?
Yeah, it can move, but how long it will take is very difficult to say. It will go to the federal court from the district court, and that will depend on the backlog in that court. So it's very difficult to say. Different states of America, there are different courts which have different backlogs. So this I don't know whether it is a New York District Court or which court it is. But if it's in a New York District Court, then to go to the federal court will of course take. They can do it, but it will take at least 6 months.
Now, the panic in the market is with the assumption that there is a charge against Adani Group of companies for a case of bribery. As a lawyer, what is the right way of interpreting the information which is available?
Well, it's a bribery case. Obviously, it's a very serious matter because it involves criminal charges. And in criminal court, things take a different view and they take a very strict view. So it's all a question of fact. If Adani's can prove that these charges are false or that they are not correct, if they can bring some evidence, that's a different matter. But having already been indicted, that seems to be a very difficult situation because this is a criminal charge and that's based on facts, not really much of law. It's a question of bribery. It's a question of what is the amount of bribery, whom it was paid. Once that is established, then the court will just pass the order.
From district court to federal court, if this case has to move, are we looking at months, weeks or years?
Well, no, not years. Definitely not years. It is a matter of weeks if it can be pushed through, saying that these are serious charges and there is enough evidence to show that this was not correct, was the conviction in the indictment is not based on the factual situation, then it will be heard very soon. In federal court, you can ask for special hearing, which can happen pretty fast.
Okay,
so it can happen within a few weeks, I would say.
Okay, few weeks is what we'll have to wait by for. Hold that thought, Mr. Ranina. We also have Sandeep Sabharwal joining us to discuss that. Sandeep, what should the investors in Adani Group of stocks do at the moment?
That's a very, very difficult question. Actually, no idea because I don't buy the group or recommend stock of the group because of the sheer volatility involved and the fact that I don't see cash flows and they are largely in an investment cycle at this stage. So very tough to say what should be done because it's not a non-serious matter. So I think people need to take a call upon it.
Okay. Sandeep, but the entire news development seems to be having an impact on the market sentiment per se. And a similar thing happened, let's say, a couple of years ago when the entire Heidelberg saga broke out. It impacted banks, it impacted the market sentiment, it broke the rhythm of the market. So in terms of an impact, do you see this really could have an impact on lenders and then especially for lenders which have exposure to Adani Group?
Yeah, so that's a reasonable assumption that there could be some impact on the lenders if things become more serious and this impacts the investment cycle and operations of the entire group as such. Because the entire group has been on a huge investment spree. They have also been acquiring companies, doing open offers, etc. So I think once such issues come up and stocks which were at 52-week highs 5 months back are at 52-week lows. So how do they raise equity and overseas fundraising could become an issue in the near term. So I think to that extent, there would be an impact. Good part, I would say, from the perspective of Indian investors who invest in mutual funds or PMSs, etc., is that the exposure of the group in many of the funds is very, very limited. And to that extent, there is an indirect impact, but the direct impact is low. And if you look at the overall large cap universe, the last 3 years CAGR has now fallen to 10%. This year, the Nifty is up just around 7%. So I think there's value in the large cap side and select mid caps. And that's how we have to look at it.
Okay, let's take a break. And we've got 45 minutes of trade left. When we come back, we'll talk about the value in large cap and select value in mid and small cap stocks. Where is value in this market? More on that when we come back. If I have to look at the market mood right now, we've not fallen off the cliff. We've managed to bounce back 45 minutes. Are we in for a good smart close? Let's see. But for the moment, it appears that markets surely have stopped falling. Okay, it's in the red, but it is not something which is having a very meaningful impact in terms of the market sentiment or, oh my God, this is just like a big India negative mood story. I think the collateral damage because of this Adani news is limited and restricted. It's not going to be far sweeping as what everybody is anticipating and expecting. Sandeep, are we in for a comeback in December? Kunal and me were discussing this in the morning that, okay, the indicators which Kunal follows, they indicate that there could be a bounce in December. US market has started stalling. China trade has not really become a formidable trade, and Indian markets have stopped falling. So do you see convergence of India going up and US coming down?
Whether US will come down or not, it's a different matter. But if you look at the performance of the US markets last 2 years, I think last year it was up 20 or 25%. This year also it's running at 24-25% up. And these are very huge returns for the US market. US market capitalization as a part of world capitalization is at an all-time high. So although there is currently a consensus view sort of that after Mr. Trump comes in as the president, look inward policy, etc., all of that will lead to the American markets doing better. It might actually be the inverse, and we could actually see emerging markets do much better, because if you look at his last tenure also, he actually talked against a strong dollar because that here hurts the competitiveness of the US economy per se. So I think the things will pan out the way they have to, but the probability is high that we could actually see emerging markets do better in 2025.
Okay, point taken. So that's the view coming in. But sorry, Nikunj, you had a point to add.
I just thought you had a message to answer. So I was just giving you time so that...
Thanks so much for being kind for that.
By the way, there is very little happening in Vodafone Idea. And it's a stock, Sandeep, which has, you go to rub your eyes and say, why did 6 become 20 and 20 has become 6? It's so amazing to see when you see the price action in Vodafone.
I think Vodafone Idea is discussed excessively, and that's the reason people get trapped into it. If you guys stop talking about it, I don't think people get trapped into it. There's no equity value in this stock. I think that's the reality of it.
Sandeep, I can understand that.
Do calculation anyway.
Sandeep, Sandeep, I'm sorry, I didn't mean to be rude here, but I just want to supplement your point further that when they raise equity, this is 3-4 months ago, sophisticated fund managers invested in it. It is not like a retail dominated stock where there was speculation or where there was HNI activity. When they raised 10,000 crores, how much did they raise?
Yeah, 11,000.
11,000 crores. Yeah. The who's who of the mutual fund industry invested in it. That's my point, that what did they ignore so badly? Sandeep, so sorry, I have to interrupt you there. Huh?
So sophisticated fund manager invested in Ola Electric, sophisticated fund manager invested in Honasa Consumers. So I think all those people don't go deep into when they are subscribing to a lot of these IPOs, and that's the big issue. And the lesser discussed about the sophistication of these investors, the better it is. All I'll say is that in any calculation which I can do, I do not see Vodafone Idea making profits at any point of time in the future. So if that is the case, and as per any theory of valuation, the value of this stock should be zero.
% down for Vodafone Idea. I'm simply fixated this with this one, and Anisha just gave me the right number, 18,000 crore. They raised about $2.5 billion, boss. $2.5 billion 4-5 months ago. And now it's become 7 rupees, and the so-called best of the best guys who claim that we are processors and we follow a template. And I don't want to just embarrass them by putting the names out as to which are the funds who've invested in it. It's in public domain. Think about it, what's happened. It's almost like 1 month of SIP money gone in Vodafone Idea. 18,000 crore is just evaporated. 1918 it came at what, 14, 12, 13, 14 rupees, and now look at where it is. 7.5 rupees for Vodafone Idea. You know, I'll keep this conversation for some other time, but 56% lower for Vodafone Idea. In the same breath, Bharti is done the other way. You know, it's the same industry where the whole storytelling of price hike coming back is at play. But if you betted on Vodafone Idea for the same story and the same theme, you lost money. But if you betted on Bharti with the same theme that pricing power is coming back and fight is getting over, the delta is 100%. One is down 50%, other is up 50%.
Yeah, I think Bharti has been a consistent outperformer. In that sense, yes.
Picking your stocks, Kunal. Stock picking, important. Stock picking. That's why we come to you always. Sandeep, just tale of two cities. I mean, Uttar, Dakshin.
Well, it's very clear, right? They are making profits, they are deleveraging. They could actually potentially, Bharti, if the capex cycle moderates, be a debt-free company in 5-6 years. Who knows? So I think the value it could still create for shareholders could be immense. So depends on how the entire price hike cycle and deleveraging plays out finally.
Point taken as far as the telecom sector is concerned, but since we are talking about stocks which have caused a bit of a value erosion and wealth erosion, can't not mention Honasa, because in the last 5 days it's managed to erode what, 40% in terms of its market capitalization. Today again it's locked in lower circuit. In fact, the circuit has now been revised to 10% versus 20% earlier. And we were just doing the analysis whether it's an industry specific issue or a company specific issue. Nykaa has performed much better, at least as far as the BPC segment is concerned. Yes, today you have a Bank of America which has downgraded Nykaa on back of the expectation that the margin recovery is going to be much slower. They've slashed the target price quite meaningfully to $150 versus $225 earlier. But definitely, you know, there is some pressure in this segment. Sandeep, what's your sense as far as this BPC category of sorts is concerned? Is it a buy at some point, or is it a complete avoid?
See, in the consumer sentiments in the country are down. That is a given. Look at any company, established large consumer companies also, they are also down. So it's not that one particular company is down. However, I think it's, but when we compare, let's say, Honasa with Nykaa, we are comparing apples with oranges, because Nykaa is suffering due to one potential slowdown in demand not playing out as well as they had anticipated, and that not helping it improve margins the way they should have. Whereas Honasa was a story which was clearly missold, because it was very clear they had dumped products in the market. The primary sales were much higher than secondary sales. The stocks were languishing, and the story was there. It's out. It was out there now. Whether you want to read it or not, that's up to you.
Okay, point taken. Just to complete that point, Nikunj, before I hand it over to you, we did speak with the management of Nykaa, you know, Advaita Nair as well as Anshit Nair a few weeks ago, and quizzed them about their quick commerce category. Interestingly, they're saying they don't want to tie up with the likes of Blinkits and Zeptos of the world, but they're coming up with their own pilot version of a quicker delivery of sorts. Hear out their take.
We believe that giving that entire assortment available within short delivery times like same day or next day is where the, what I would say is where the bullseye is.
The puzzle is missing right now.
Yeah, it's where the bullseye is, you know. And we continue to strengthen that capability. So you'll see that over the next several quarters, our same day and next day delivery ratios will continue to improve from 65%. And our plan is that, yes, at some point in the near future, almost 100% of orders should be completed within same day or next day. We have 200 plus physical retail stores across 72 cities. If I look at major metros like Bombay and Delhi, we have anywhere from 15 to 20 stores in these cities each. So how can we leverage our existing store network? How can we leverage what we call as micro warehouses in these cities to actually make the speed of delivery even faster in a matter of hours or a matter of minutes? So I think that's something also that we're layering in.
Okay, so that's how Nykaa is gearing up to fight the quick commerce war. But with that, we'll take a short break. And as we do that, thank you, Sandeep, for joining us on the show today and giving us your insights. A quick breather, and we'll be right back for the last 30 minutes of the trading session. Welcome back. Well, the weakness in the market really continues, but for what it's worth, we have been fairly flat for the last couple of hours. So we haven't moved much either on the upside or on the downside. Pretty much flat at the moment with that cut of around 150 to 200 points. That's the kind of cut we have been maintaining throughout. What is doing well in the trading session today is Vijaya Diagnostic. That stock is up 8%. Ratnamani Metal is doing quite well. VIP Industries is higher. You also have NLC India, Indiabulls Housing Finance or Sammaan Capital, which is the name that is higher by 5%. On the losing side, Adani Group of companies continue to be under pressure. Thermax surprisingly is down 5.5%. And you also have REC, PFC, a lot of public sector banks, the likes of PNB, etc., which are under pressure. Nuresh, if I can come to you on some of the stocks which are under pressure, Thermax, for instance, REC, PFC, for instance, is there a scope of bottom fishing here, or there would be lower levels coming and one should not look at, kind of buying these in a, very quick fashion?
Actually, the other way is around. All these names looks interesting. Thermax, after topping out at 5,700, 4,200 is a very strong support. So that's the price point you want to buy as closer as possible. Stock looks interesting, has gone through a 1-year consolidation. Same way, if you look at REC, the stock had been holding on about the 480, 490 mark. Actually, it was a reversal a day back. Today, the stock has taken a hit post the Adani news, but a good recovery from the intraday lows. I would not expect it to break that multiple supports around 430 to 450, which has been the low for the last 1 year. Same way, PFC 400 has been the low for the last 1 year. So expecting this as a good price point to actually accumulate and have some patience, be ready to see the volatility.
Subramaniam joins us. Actually, I'm talking to him after a while. Hello. How are the grandchildren?
He just turned 1.
Time flies. Time flies. I still remember cherishing the sweets which you'd sent. So shall we talk stocks for a change? I mean, you've been helping us a lot with personal finance advice, but today it's all about what is happening in Adani Group of companies. Without getting into a specific stock advice, let's understand the impact of the news.
Yes.
If you're a fund manager, how would you analyze this news?
So the first thing I would look at is that this is an allegation, right? You're innocent until proved guilty should be the thing. Markets tend to overreact on such news, right? So that's the first step, is that to realize that the market panics when such news comes. And so at this point, is that panic on today done, or is tomorrow the panic going to continue? That's a decision to make, number one. Number two, if you see, this is related to a specific green energy project. Now the entire Adani pack has got affected. So I would still say the core business model, if the cement company, the port company, those kind of things, I don't think the business models have changed because of this. So I would say that where those valuations, right, were a little bit overvalued because the whole market was overvalued, right? To the extent that the correction is coming there, I would say some fund managers would look at buying those not related to the specific case over a period of the next few days, right? Because they are good, solid operating companies, which are just sentimentally getting affected by this particular case, right? The other thing around this is that since this is about the solar and the green, the world's largest green award and all of that, the question around the overall infra on the renewable energy pack, right? Some of the investors would look at it and say, is this going to change things at the ground for the overall renewable energy thing? So there might be some easing of buying on that front. And so there could be good opportunities coming up in those spaces. So overall, I would say that on this particular case, obviously, we cannot comment because there has been an allegation. They have responded denying it. Obviously, the political aspects of it are also playing out very strongly. But not to actually the companies which are actually affected by it, I would say you stay away because we still don't know what the ultimate answer is.
It's looking, Sunil, irrespective of today's news development.
No, irrespective of today's development, I would say that the market, I would say, is in for a continued period of volatility for at least another month. I see this based on three things. One is the Trump effect, which is still playing out in terms of a stronger corporate America and hence a tendency to invest back in America away from emerging markets. That's number one. Second is the US inflation numbers plus the economic growth numbers have suddenly thrown cold water on a high rate cut cycle. So there's obviously the Fed chair has reversed stance to some extent. So if interest rates are not going to cut, then you're going to see a stronger dollar, which again going to aid flows out from emerging markets. And the third aspect is geopolitical tensions outside. The Russia-Ukraine as well as the Israel-Hamas, both are refusing to die or close out in any way. There is positivity around Trump trying to come and play peace broker there and solving it. So, but I would say to the extent that it has an impact on oil, it's important to India, right? And the fourth thing is that the FIS selling is, apart from all of these concerns, is also because it's December profit booking time for hedge funds, right? And that will go on till the middle of December because the last 2 weeks of December they'll go off on a holiday. So they need to book cash to receive their bonuses. And they will sell in those markets where they made money. And whatever is said and done, India has been the best performing market other than the US for FIIs. And so they will book profits where they made profits. So I expect this, independent of today's news event, to happen. Then you have I wouldn't call it the cream on the cake, but the fact is that Indian earnings season has been disappointing, right? So that's added to the concerns around overvaluation. Has the correction taken care of the entire overvaluation? Not yet. I think some more volatility and some more readjustment of price is still in the annual. That's why I say till mid-December, I would expect this volatility, perhaps a little more correction to happen. But I see a very different story come January onwards, right? Why do I look at it that way? Because one is, Jan 20th, Trump will actually come. By then, all his announcements, everything will be over. So there will be a sense of stability around America, and the money that has to go into America would have gone in. Second is all this profit booking in December needs to be redeployed in January, right? Because they'll move into cash, they'll move into US securities, and then they'll want to redeploy in the markets of their choice. So India will be a potential target. Third is this slowdown in earnings, right? If you deconstruct that, I would say three reasons behind that. One is the fact is that the government spending, first because of the election, and then post that the government capex has slowed down. So they haven't spent. But I see that in the next 2 quarters, the government spending has to pick up because they will use the budgetary allocations. They have enough fiscal deficit room to be able to spend what they budgeted. So that will lead to a trickle-down effect and lead to more order books and better earnings outlook. Second is the actual September quarter earnings did not reflect the Diwali season because Diwali was later in October. So I would believe that some of these numbers, when they come out in the January earnings season, would actually get upgraded from an outlook perspective. So I see that the current downtrend in terms of downgrading the EPS growth for next year would actually get stabilized and you would have a fresh outlook and perhaps an uptick in the earnings expectation. Then we have also, 1st February is the union budget. The union budget is a time for government to lay out its policies, infra, the reforms, and there will be a positive expectation around that. So I do think that an FII reversal in flow would start sometime in January and go on for a month or so. And so the markets would probably recover all of these losses in the first quarter. So I say that expect a heightened degree of volatility for the next month or so. But if you're patient through this period, then I think in January and February, you'll enjoy the rewards of your sticking through your investment process.
Point taken. Let's wait for the month of January and hopefully 2025 is going to be better because this year has been all about the FII exodus and the big money outflow that we have seen. But taking it back to the Adani story because that's the biggest talking point in the market. In fact, the more updates are coming in on the Adani case. Ministry of Renewable Energy sources tell ET now that they haven't received any documents from the US Department of Justice at the moment. Prakash joins us with the latest on this one because Prakash, the biggest talking point in the market market is, what exactly is going to be the impact on the financials of the company as well as the order which they have won? Any word coming in from the ministry on that?
Yes, we are learning from our sources in the Ministry of New and Renewable Energy that they can't comment on the media reports. In fact, they have not received any documents related to this matter. However, sources are saying that there is a robust system in place for contracts. In fact, the government agencies are following a very transparent mechanism, but they can't comment on this report at this point of time. Along with that, we also approached a SECI on this matter, and the SECI officials are saying that whatever information they have received from media reports, and they can't say anything about the authenticity of the order. In fact, they have not received any document about the charges. SECI officials are also saying that as per the media reports, there is no involvement of SECI officials. It seems that there is some involvement of government officials and the companies, but SECI is completely denying any involvement of its officials as per the media reports. But let's see how it pans out. But at this point of time, there is no official statement from the government on this matter.
Cannot comment on media reports, but SECI, now I don't recall the full form, but it is Solar
Energy Corporation of India.
Okay, they've awarded the order.
Yes, they are the ones who look at bifurcating and give the projects and awards.
And they've said that, look, we've not received anything, so any speculation that the order is going to be cancelled, at least that does not hold true. So that's an ET Now exclusive in terms of what the SECI chairman had to tell ET Now in terms of what the latest update is. But markets are markets, sentiment, technicals, flows, everything comes in the short term. So Naresh, based on today's price action and based on Tuesday's encouraging price action, where do we stand? I mean, one step forward, two step back, or two steps forward, one step back?
The continuous move in terms of news in the last two sessions actually fractured the recovery. So if you go back to Tuesday, we actually had a good 200, 300 pointer recovery from the lows. We had strong breadth, and by end of it, we saw the Russia-Ukraine news and we saw a crack in the last 1 hour. Now, going into the holiday, the GIFT Nifty was up 200, 250 points, again back to the same 23,700, 800. And we get up today and we see Adani news, and that has again fractured the move. But if you look at today, the only good thing is we've not hit a new low on the mid cap or the small cap indices. We are continuing to see follow-up selling pressure on stocks which we were seeing before also. For example, today, out of the 150 points, you have a 35 pointer impact coming from FMCG. That's an index which has continued to make new lows. You have Reliance Industries, which is down 24% from the top. That tells you there has been a lot of correction in a lot of heavyweights. So here on, the bias is wherein your risk reward is much more on the buy side rather than on the short side. On the way up, 23,700, once we start sustaining, that would indicate a positive reversal. For now, looking out for reversal signals, but overall, majority of the indicators are oversold on the indices across the board.
Oversold indices, that's the view coming in, but the big question is, when do we see that recovery and a sustainable recovery? Because on Tuesday we got excited that perhaps we have made a bottom, that there is going to be a bit of a recovery, but no, that was not the case. But for now, at least it's a recovery from the bottom of the day, though still considerably in the red. But what about the way forward as far as consumption sector is concerned, and what's Morgan Stanley's Rhythm Desai's view on the same? Let's hear out.
Coming out of COVID, rural India took longer to witness the transfer of terms of trade from urban India, but that is now set. And therefore, I think consumption will actually see all-round recovery. The slowdown in urban consumption that a lot of consumer companies are complaining about, I think is temporary. Now, within consumers, though, you have to be a bit more nuanced because there are certain companies that are running into stiff competition. Their moats have been diluted, and there are other companies that have very strong moats. So to my mind, for an investor looking to pick stocks, you have to assess the moat of that particular business. And any business that is subject to intensity of competition will not deliver the growth that you need to make money. So that's the nuance in consumer. Also, the second thing is that because India's per capita income is rising, discretionary consumption will grow much faster than staple consumption. And I think we are only seeing reiteration of those trends whether it is with respect to quick commerce, whether it's respect to leisure, travel, education, entertainment. I think these areas are certainly going to grow faster than soaps and staple stuff.
That's the word coming in from Morgan Stanley. But of course, the Indian markets, one of the reason perhaps of the FI money flowing out has been the dollar strength. That's what the Trump trade has really played out. And the dollar strength really continues. We're still past the level of 106 on that one. And that means that the rupee weakness is actually worsened. We are at record low when it comes to the rupee. 84.50 is what we have touched. Clearly, Nikunj, traveling outside is going to become more expensive. 84.50. I remember a few years ago, we were talking about levels of what, 75 and thinking it's getting more expensive, just heading higher.
You can go to a lot of other countries where the currency is not devaluated.
I think only Turkey, Sri Lanka, and a couple of those, Japan, I think.
Japan. So yeah, it's
these
all
are the
about
favorable
choices.
ones.
It's all about choices.
I'm gonna put in my holidays very soon and make an itinerary for these countries. But in the meantime, let me talk about the dollar strength. Is it gonna get any better?
Singapore is not strengthened that much. Singapore dollar is not strengthened.
I'm not sure the relation between that, but Vietnamese currency, I'm told by my PCR friends that too has become a lot more attractive to travel at the moment. But should we buy the currencies and convert them right now? Wait for it.
No, we are at a very critical point when the dollar index chart. So over the last 2 years, I think sometime in 2021-22, we were flagging off that at 114.15 mark for the dollar index. It had got back into a deep overbought territory, and it was time for the index to get back into a correction. Now at 106 odd levels for the dollar index, we are on the verge of a breakout of sorts. So 2023 September, October is where we made a high of 107 odd for the dollar index. We fell down to almost 100 odd for the dollar index, which means we were stuck into the 7-point band for the dollar index for the last 1.5 odd years. Now if a breakout happens above the 107 mark, I think that could probably be a tricky point for the overall market situation, because this could mean that we could be looking at a potential retest of even 110, 114 plus range for the dollar index in the due course. Yeah, 110 plus is also possible. 107 is the breakout.
Right.
If we cross that, then you're looking at 110 also for the dollar index.
I know that means we are looking at levels of 86.5, 87. And till the time the yields will not peak out, dollar will not stop strengthening, we are not going to see inflows into the market.
Correct.
Exactly. So I think the lynch point that we need to track very closely is the dollar strength and the movement in 10-year yields, because that's been the deciding factor so far in the market.
See, my point is that you have to really be cognizant of the fact that what is America's biggest problem. For the first time in its history, their debt is actually higher than the GDP. Right?
Yeah.
If a country has got this kind of a debt to GDP ratio, that means if higher yields is something which is problematic for them. So I don't know who's watching, who's observing, but to assume that the new Republican administration will only print money, they'll only reduce tariffs, only increase tariffs and only reduce corporate tariffs may not be the totality. So let the ball start rolling and then we'll talk about it, where the yields are headed and where the dollar index would strengthen. Because I sincerely feel that the Trump 2.0 versus Trump 2.1 will be very different because of the fiscal deficit you have. When I say fiscal deficit, not the fiscal deficit, but the deficit they have. And which is where I think markets will get it totally wrong.
And you know what's interesting? He's on record to say that he does not like the dollar strength. He wants the dollar to weaken. The only reason why Street is reading into the strength is because of the tariffs and the other trade implications that will happen. That will take the dollar higher. But if you go by Trump's commentary, he does not like a strong dollar. In fact, he believes a weaker dollar is something that is going to be beneficial. So for now, of course, it's been quite extended, and Kunal is not ruling out a possibility of 110 if 107 is broken. We'll discuss all of that more, but there are a lot of moving parts to that. Let's get the conversation back to our home and try and discuss the BTST ideas and make it a bit more simple and not take up a complex subject. The BTST trades for tomorrow, Kunal?
So I'll go with a couple of buy trades, and the ones which have been bullish on. Coromandel Fertilizers, the first stock, looks very attractive. And now, interestingly, the stock is perched at a fresh 52-week high, just very close to those kind of breakout levels. So would look out for targets in the range of 1800 plus, 1810 to precise, and stop loss could be kept at 1735. Keynes Tech is something which has been looking attractive. The stock has shown a lot of resilience today, bounced back from its 50-day moving average, just around that 5,650 as a strong support. So keeping 5650 as a stop loss, would suggest a buy with 5980 as a target for Keynes.
Okay, point taken. That's the view coming in. Naresh, your BTSC trades?
So first would be a buy on Ramco Cements. Momentum continues here. Stop loss at 905, target price of 940. Second is a buy on PowerGrid, which has held on strongly in the correction, and today is showing some bit of momentum. Stop loss at 320, target price of 330.
Thanks, Naresh, as well as Kunal for joining us. Sunil, before we let you go, a quick word, a last word as to give me the top 3 sectors that you like right now, or would at least hazard a buy, so that when that recovery happens in Jan, you are ready for it.
I think BFSI is my top pick because the bank index hasn't grown as much as the Nifty. But the way forward, if you see, because my other 2 sector picks are discretionary consumption, and discretionary consumption, I believe, has to be supported by bank lending. And at the same time, the per capita rise means that the right-hand side of the bank balance sheet, that's the investment side, the SIP book, the fee income that comes in, is going to support that. And at the same time, I feel that IT as a sector, because with a revival in US corporate, a stronger dollar, all that augurs well for IT companies. So my top 3 sector picks are BFSI, discretionary consumption, and IT.
Okay, so BFSI, discretionary consumption, and IT are Sunil Subramaniam speaks. Mr. Subramaniam, thanks so much for joining us along with Kunal and Naresh. But on that note, let's start winding down for the day, and let's take a look at what the markets are like right now. 23,350, much below the 23,400 level is where the Nifty is right now. A 0.7% cut coming in, 170 points lower on the spot basis is the Nifty. In tandem, in fact, you have Sensex that's also 0.5% down to 77,194, just below 77,200 is where we seem to be shutting shop for the Sensex also today. However, if you take a look at the broader markets, we've seen some stellar recovery coming in for the broader markets today, until you had mid-cap that also once again slipped into the red after making it to the green during midday today. Nifty mid-cap down 0.3%, Nifty small-cap down also almost 0.5%. But the one sector that merits a special shout out today is the Nifty Bank, because very stellar recovery, 1.5% higher from the day's lowest point is where Nifty Bank is right now. Nonetheless, it's in the red, but it's been a stellar recovery coming in for that one. 0.3% in the red is where Nifty Bank is, but above 50,000 levels. If you take a look at the advanced decline ratio, comfortably in the favor of the decline, so that's a little bit of a problem coming there. Let's take a look at some individual sectors that have done well rather, and you have Nifty Realty and IT that are your big winners today. However, on the flip side, PSU Bank, Media, Metal, Energy, FMCG, Auto, Bank and Pharma are your big losers today. What did well and what did not do well for the index, at least on the Nifty 50 pack, you have the Adani group of stocks that were beaten down in today's trade, so that is something that did not do well. Followed by that, SBI Life, NTPC, SBI, ONGC, Asian Paints, ITC, all of them trading with cuts of 2%. However, on the flip side, what did do well was PowerGrid, Ultratech, Hindalco, Grasim, Apollo. All of these have ended the day in the green and have seemed to done well for the Nifty 50. But well, yes, without going into much detail about it, you had some brokerage action coming in, some other stocks that were in focus, the likes of Aegis, UPL, Britannia, Nykaa, Paytm. Lots of stocks in focus today, but other than that, this is how we've shut shop for the day. 23,346, so even below that 23,350 level is where Nifty has closed for the day.
If you like this video, then like, share and subscribe to ET Now.